At the same time, you can get much higher returns than 10%. You can get 20, 30, 40, 50% returns a year investing in the stock market if you know how to pick the right stocks. If you know how to pick the stocks of the fundamentally best companies and buy them at the right time. So that's what I do for a living. That's what I teach my students. So what are the best companies to buy that will thrive under inflation, that would beat inflation by a wide margin? So these are some of the criteria. Number one, I focus on businesses that are pandemic-proof and recession-proof companies. So in other words, even if the pandemic lasts for 10 more years, the companies will continue to grow their sales and profits. And they're recession-proof. So these are what we call secular growth companies or defensive companies. Companies like Amazon, Facebook, and Adobe, and Salesforce. These are the companies which I invest in. The next thing is this. Now, again, not all companies will do well under high inflation. Companies that do well are those that are able to raise their prices of their goods and services above inflation. So in other words, if inflation rises by 2%, the company can raise their products by 4%. Now, not all companies can do that. Only companies with high pricing power. And pricing power comes when a company has got what we call a brand monopoly, like a Nike, like a Ferrari, for example. So companies with strong brands, they are able to constantly price their products higher than inflation. So it doesn't matter how much inflation there is, they will always grow their sales and profits in real terms. The next thing that is really important is this. To beat inflation, you want to invest in companies that require very little capital expenditure to grow and maintain their competitive advantages. And that's why I tend to avoid companies in manufacturing, in shipping, in construction, in development, property development. Why? Because they require the constant reinvestment of capital. And because of inflation, the capital investment gets higher and higher that will eat up their higher sales. Does that make sense? So I want companies where you invest one time and they've got the brand, their assets are intangible, and they require very little future investment. So when you invest in great companies, again, you won't just get 10% a year. Again, 10% is only just buying the index. An idiot can do that. But when you learn to pick the right companies, you can grow your investments by 20, 30, 40, 50% a year, or even in some years, even 100%. In fact, if you take a look at my personal investment portfolio, year to date, 2021, for the first 4 months, you can see year to date. Let me just show you year to date. I'm up 13.88% for the first 4 months. And for the last 1 year, I'm up about 110%. And this is just one of my many, many portfolios. Another portfolio I have is right over here. So this one, again, year to date, I'm up about 10.5%. And for the last 1 year, this portfolio has grown 91%. So, like I said, if you pick the right companies, you can get huge returns on average in a year. And it's not just me who can get it. All my students are able to achieve this because they've learned the right strategies of value momentum investing. In fact, I was really happy to see a very nice message from one of my students over the weekend. Let me just show that to you. Yep, so this is one of my Telegram groups, and this was sent by Anne, right? So that's Anne over there, and she said, and by the way, she just posted her portfolio right here. You can see in her portfolio, she got 31.44% in the last couple of months. And she said, last year during the lockdown, I spent time studying Adam's courses. My friends and family said I should have saved my money instead of wasting money on costly online courses because there are tons of free videos online. I told them I could make at least 15 to 20% return, but they said that's only for experienced investors. But today, when my portfolio is up 30%, and now they all ask me to manage their savings money. right? 2020 is still the best year of my life because I was lucky enough to discover Adam and had a lot of free time learning from his courses. So again, the best investment you can make is investing first in yourself and then investing into assets that can beat inflation and to grow your financial wealth. Besides businesses, the other asset that beats inflation and grows your wealth would be real estate. So I believe that everyone has to own businesses, everyone has to own real estate. Why? Because land prices, property values, and rental income always rise alongside or higher than inflation, especially if you buy high quality real estate assets, right? So again, you can buy physical property, but again, if it's beyond your budget to buy apartments and all those things, you can buy REITs, real estate investment trusts. So with REITs, with a couple of $100, you can buy shares in a portfolio of real estate all around the world and earn rental income. And so one of the indexes that you can look at to represent real estate would be the Dow Jones All REIT Index Trust. If you take a look at the last 18 years, now I can't go back more than 18 years because it started 18 years ago, right? So since inception for the last 18 years, the Dow Jones REIT Trust has returned 10.12% on average a year. So it's very much in par with the general stock market. Another very common asset used to hedge inflation would be gold. Now, you can't really buy physical gold to hedge inflation. It's going to be too cumbersome, right? So normally we buy gold ETFs, an ETF that tracks gold prices. But I'm not really a fan of gold. And the reason is because gold is not a productive asset. I only like to invest in productive assets. What does that mean? A productive asset is something that you buy that produces something. In fact, to me, the intrinsic value of an asset, what an asset is really worth, is based on what it can produce. So for example, if you buy a business or you own a business, it produces cash flow, which you can use to pay dividends or retain the earnings in the business. It makes something. If you own property, it generates rental income, so it makes something. But if you own a piece of gold, gold doesn't make anything. It just sits there and looks pretty, all right? So you can hold gold for 20, 30 years. At the end of 30 years, it's still a piece of gold. But if you own property for 30 years, at the end of the 30 years, you have the same property, but you also collect all the rental income over the years. Same thing with the business. So again, I only like productive assets. So when an asset is not productive, when it doesn't make anything, it has no real intrinsic value in a way. So its value is purely speculative. So what gold is worth is purely psychological. It's what people are willing to pay for it. So it's very much based on demand and supply. So it's very hard to value gold in that way. So that's one reason I don't like it. The other reason is if you look at the last 30 years, gold has an average return of 5.1% CAGR, compounded annual growth rate, for the last 30 years. So comparing with businesses, stocks, and real estate, gold's return is half of those returns. Now, not only does it have less than those returns, but it has one of the highest volatilities as well. So if you look at this chart over here, you can see that gold not only doesn't have the highest returns, but in terms of standard deviation, which is a measure of volatility, it's got the highest volatility. So I'm not a fan of gold. So let's take a look at how they have performed in relation to each other. So again, this is the last 30 years, and over here you can see right at the bottom, you've got the inflation index, the CPI. So you just got to beat that. So pretty easy. Gold itself, you can see, beats the inflation rate. But like I said, I'm not a fan of gold. But again, holding gold is better than just holding cash. But beating gold would be the S&P 500 index. Now, the next chart will show you REITs as well. And again, this is the last 18 years because the REIT index only goes back 18 years. And you can see that, again, the all-time winner would be the S&P 500, the 500 biggest companies in the United States, followed by REITs, which represents real estate in the US, gold, and finally, that all beats inflation. Okay, so there you have it. These are the best assets that's going to beat inflation and build your wealth over many, many generations to come. Okay, now I know some of you are thinking right now, wait a minute, how about Bitcoin? How about cryptocurrency? You can't ignore that. You're blasphemous. I've got to talk about it. Fine, I'll talk about cryptocurrencies, talk about Bitcoin, although you guys know I'm not really a big fan. Now, sure, we can't ignore Bitcoin / cryptocurrencies. In fact, in the last 1 year, Bitcoin itself has gone from 8,000 US to now 60,000 US. So that's about, 800% of your money in 1 year? So how can you not talk about Bitcoin? Fine, I'll talk about it, right? Now, like in everything, there are advantages and disadvantages, pros and cons in any asset. So, what are the advantages of Bitcoin? Obviously, number one, crazy price appreciation. Again, 800% in 1 year. Who doesn't want a piece of that action? So why has Bitcoin become so popular? Because one of the major arguments is that it's a good replacement to fiat currency, which is the US dollar, the euro, the Japanese yen, because fiat currency, there's no backing from gold or anything, right? So because of that, central banks can print unlimited amounts of fiat currency and they can be devalued over time. Whereas for Bitcoin, no one can print more Bitcoin. Well, theoretically, because there's a finite number, which is 21 million Bitcoins. Right now, there's already 18 million in circulation. So there's another 3 more million that can be mined. And once that's dead, you can't have any more Bitcoins. So in other words, people find it attractive because there's a limited number of Bitcoins. You can't have more Bitcoins versus you can have more US dollars, more euros. You can't have more Bitcoins, right? So supply is limited. So as long as demand goes up, the price should keep going up. And that's the theory behind the popularity of Bitcoin, right? Can't be devalued by central banks. It's a private, decentralized ledger. And it's a gold-like alternative asset to hedge against inflation. So that's what's great about Bitcoin, no doubt about it. Before buying any asset, you can't just look at the upside. You can look at what's the downside. What are the risks of that asset? So Bitcoin and cryptocurrencies in general, they have risks. The first major risk is that, again, it's not a productive asset. Just like gold, Bitcoin, it doesn't produce anything, doesn't make anything. So because of that, cryptocurrencies and Bitcoin has zero intrinsic value. It's got no intrinsic value. Like I said, intrinsic value comes from what the asset can produce. If you own a farm, it produces crops. If you own a business, it produces cash flow. If you own real estate, it produces rental income. But Bitcoin doesn't make anything, doesn't produce anything, so there's no intrinsic value. And again, the only value it has is psychological value. It is worth what people are willing to pay for it. And by definition, cryptocurrency and Bitcoin, they are not really currencies by strict definition. Now, how do you define a currency? To be a currency, there are two criteria that must be met. Number one, it must be a widespread store of value. All right. And as of now, Bitcoin is not widely adopted as a store of value. Sure, there are people who buy Bitcoin to store their wealth, but it's not widespread. And the reason is because of the huge volatility. As long as volatility is huge, it can go up, 20%, down 30%. Not many big institutions are willing to use that as a store of value because it's too uncertain. The second thing is, for it to be a currency, it must be a widespread medium of exchange where you can use it to buy, clothes or buy candy or buy food and stuff like that. Sure, now Elon Musk is saying you can buy a car with Bitcoin, and sure, there are people who are offering that, but again, it's not widely adopted. Think about it. You buy Bitcoin not because you want to use it to buy something else. Not really, right? Unless it's not a cryptocurrency. You don't buy Bitcoin to really store your wealth. You buy Bitcoin for one reason only, because you're hoping to sell it at a higher price. So to me, it's purely a speculative asset, the way I look at it right now. So that's one of the concerns that I have. So when something has got no intrinsic value, you have no idea what it's really worth. And it's really hard to value something, to put a number to its true intrinsic value. I feel uncomfortable buying something like that. The next thing is this. Now, if Bitcoin or cryptocurrencies really become widely adopted, let's say one day people are using it to buy stuff, people are using it to store their value, is that good? Maybe not. Because then it will threaten governments of the world. Now, governments of the world, they want a monopoly over currency. Once they see that Bitcoin becomes a credible threat, it's not yet a threat, but once it becomes a threat, guess what they're going to do? There's going to be a high chance the governments of the world are going to ban and outlaw and confiscate Bitcoins. You don't think it's going to happen? It happened in 1933. In 1933, when the US government decided to get the US dollar off the gold standard, they confiscated everyone's gold. And if you didn't give your gold to the government, you had to go to prison. This was the executive order by the President of the United States on 1st May 1933. Give me all your gold. If you don't, it's 10 years imprisonment. You know, my great-great-granddaddy gave me this newspaper article. I'm just kidding, I just got it off the internet. So, it could happen to cryptocurrencies, it could happen to Bitcoin, you never know. The next risk is that Bitcoin is a very highly leveraged asset. So a lot of people around the world who have bought Bitcoin and who are pushing the price up to astronomical levels, they have actually borrowed a lot of money to buy Bitcoin. So it's very highly leveraged, although you may not leverage buying Bitcoin. So what's the point when an asset has a lot of leverage behind it? The moment the bubble bursts and the price drops, it will drop like a stone. And that's why Bitcoin is extremely volatile, because of the high leverage behind the price movement. Finally, again, the main argument is that Bitcoin is scarce. There are only 21 million Bitcoins, you can't create more, in theory. But here's the thing, nothing is stopping programmers or other people from creating alternative digital currencies to replace Bitcoin. Now, I'm a firm believer in blockchain technology. I believe that blockchain is the future, but it may not be eventually Bitcoin that becomes the medium of exchange. There could be future newly evolved cryptocurrencies, in fact created by governments, right? Digital currencies created by China or the US that will replace Bitcoin eventually using the blockchain system. So in other words, to me, I think the scarcity concept is an illusion, right? New ones can come along to replace Bitcoin or Ethereum in the future. So if Bitcoin really becomes widely adopted in the future, if it really works out, let's say, what's the potential upside? Well, let's do some calculations. Currently, Bitcoin has a market capitalization of 1.2 trillion. So in other words, you take the price of one Bitcoin, multiply by the number of Bitcoins, in total 21 million, you get $1.2 trillion. Currently, the total market cap of all the gold in the world that's been mined is 13 trillion. So currently, Bitcoin makes up roughly about 7% of the market cap of gold. So if Bitcoin can become the new gold eventually, and it can be credible replacement to gold as an alternative asset, let's say in the future, Bitcoin will make up 50% of gold's market cap. In other words, people around the world will move 50% of what they used to own in gold to Bitcoin. If that happens, then Bitcoin could reach a market cap of about 6.5 trillion. All right. So based on 6.5 trillion, if you divide it by 21 million Bitcoins, that gives us an upside target of $375,000 per Bitcoin. So at current prices, the upside would be a 500% increase if everything goes as planned, right? But remember, when you invest in something, don't just think about how much you can make. You got to think about how much you can lose. What if shit happens? What if Bitcoin doesn't become widely adopted as a medium of exchange? What if people soon realize that it's nothing but a big bubble that bursts? What if governments confiscate all the Bitcoins in the world and ban Bitcoin? What happens then? Well, then Bitcoin could drop 80 to 90% to maybe $6,000 to $12,000 from where it is today. So people ask me this question all the time, Adam, should I buy Bitcoin / cryptocurrencies? And the answer is, it depends. If you're willing to lose 80% of your money with the hope of making 500%, go ahead, right? So it really depends on your objectives and your risk tolerance. It's up to you. Now, for me, you guys know that I'm a chicken. I rather not make money if I've got a chance of losing money. I'm like that, right? So I believe in rule number one, never lose money. Rule number two, don't forget rule number one. And because of that, I don't invest in Bitcoin because I don't even want the possibility of losing money. You see, when I buy stocks of great businesses, to me, the downside is zero. I cannot lose money on stocks. Because when you buy good companies, sure, in the short term, they could go up, they could go down, they could drop 30-40% in the short term, but in the long run, it always goes up. Stock market always goes up because you're buying companies that are producing goods and services. People always need goods and services. When you buy real estate, it always goes up in the long run. But for Bitcoin cryptocurrency, there is a downside. And so because of that, yes, I have bought a bit many years ago. I've got some Bitcoins and Ethereum. Just leave it there like a lottery ticket, like a 40 ticket. If it goes to zero, I don't really care. But to me, it's not an investment. It's just a punt. It's a lottery ticket, right? But when it comes to investing my real money, my big money, I stay away. And it's just me. Call me a chicken, but I know I'll be a live chicken in 10 to 20 years. So I hope you enjoyed it. Hope you've learned something, got questions, comment below, and I'll see you in the next video. If you want to catch my latest videos, click on the subscribe button right now. Click on the bell so you get instant notifications once I upload my latest video. If you want to check out my online courses, go to piranhaprofits.com. We're going to learn how to invest and how to trade the financial markets and create an income from all around the world. If you want to join my live Wealth Academy program, go on to wealthacademyglobal.com and find out more about how you can learn investing and trading live online. This is Adam Khoo, and may the markets be with you.